Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, 5G is the hot topic at this year's MWC, but the uncertain future of Huawei continues to overshadow the industry. We'll bring you the latest out of Barcelona. Plus, signing summit. Why President Trump is preparing to host Chinese President Xi at Mar-a-Lago and what it means for the upcoming tariffs. And privacy practice, California isn't waiting on the federal government to regulate big tech. Why its proposal has companies like Facebook fighting back. But first, to our top story. MWC Barcelona, formerly known as Mobile World Congress, is underway in Spain. But this year's event may end up being more flash than substance. Companies are touting 5G technology, but with little to show in terms of large commercial uses or consumer uses. Another big story to dominate the conversations this week at MWC is the future of Chinese tech firm Huawei. As we've been reporting, a number of countries around the world have banned Huawei, including Australia, New Zealand, and the United States. The U.S. has charged the firm with allegations of stealing trade secrets and bank fraud relating to business in Iran. But all this hasn't slowed the company down. Huawei announced its own folding smartphone to challenge the one just unveiled by Samsung. Joining us now to discuss, Technalysis Research President Bob O'Donnell, who is in Barcelona, where MWC is taking place, and also with us Anand Srinivasan of Bloomberg Intelligence. So, Bob, we'll start with you. You are there on the ground. You were at Samsung's unveiling last week as well. Set the scene for us in Barcelona.
Well, as you said, Emily, I mean, they're talking about 5G like crazy, and there are actually quite a few phones that have been announced with 5G modems here at the show from about 6 or 7 different vendors. And of course, the big news is around the foldables. And, you've got both the Samsung Galaxy Fold and then this new Huawei Mate X. And very interesting devices. I mean, one folds in, one folds out. Physically, the designs are very different, but I tell you, the excitement level around foldables is tangible. People are ready for something new and different in the smartphone market, and they are very anxious to see these. Now, at the price points they're at, of course, they're not going to sell in huge volumes, but at least it sort of sets the tone for the future, and I think that's very interesting.
Anand, are you excited about foldable phones?
No.
Like Bob is?
No, I'm not. So very simply, no, I'm not. Look, from a corporate perspective and from a consumer perspective, I think the consumer is interested in about these new styles, these new options, new feature sets. But the value of these phones, or the average selling price of these phones, is going to make the market very, very small, as Bob has already mentioned. So one of the things that we want to understand is what makes the market bigger. 5G alone can't do it. 5G is not really here in 2019. 2020, perhaps we see more traction. Infrastructure has to be built first. New and additional features, move the market a little bit at the high end, but at the high end, the market is actually lengthening. The people are holding on to their phones for 3 years, even longer. And at the low end, some of the feature sets are creeping in, but it's not enough to offset the weakness in the high end. So all in all, I think the smartphone market is going to be lackluster. We think there's more downside to numbers from companies like IDC or even Gartner. And to be quite honest, that's one of the reasons I'm not at MWC this year.
Now, I want to talk about what people are saying about Huawei. We've got the UK, Germany, Canada, Japan, all considering the role of Huawei in their future networks. Bloomberg spoke to a number of different global mobile leaders at MWC, asked how they're feeling about Huawei. Of course, the contention is fears around their equipment being used for espionage, and the U.S. has pushed back on all of these countries to encourage them to ban Huawei equipment. Take a listen to what these executives at MWC are saying about Huawei.
We have to plan for every eventuality. Huawei are an important part of UK telecoms infrastructure, and any change to that, is something we'd have to deal with.
There is a lot of noise, and we really like to become very factual on that issue. For the time being, there is no proof of any wrongdoing in any part of our networks.
There are a handful of technology companies who are capable of supporting companies like us with technology. And so far, Huawei has been a trusted partner for us.
We need to avoid any further delay because it might be very damaging for Europe globally.
It sounds, Bob, from there that some of these European tech leaders are taking a less antagonistic stance towards Huawei. Is that a fair read?
I think that's absolutely a fair rate, Emily. And, you know, you have to remember a lot of the infrastructure, that equipment has been there for years, and it's very expensive to replace. You can't just rip all this stuff out. So any actions that would be taken towards Huawei are going to take several years realistically. And so there's that practical side of the question as well. But you're right, in generally speaking, here in Europe, there seems to be more willingness to accept them. Of course, their consumer products are sold here. They have decent market share here. You know, remember, Huawei's the #2 smartphone seller in the world. It's just they have zero presence in the U.S. So we tend to think of them very differently. But I would say in general, yes, there's a lot of focus on Huawei, a lot of discussion there. But, you know, at the end of the day, I think there's going to have to be some serious security assessments that are done and people who are willing to accept what some of those answers come out to be.
You know,
now, Anand, we were speaking with Miki Mikitani, who's the CEO of Rakuten, who's trying to build a whole new mobile network in Japan. He said he decided not to use Huawei equipment in that network because of concerns around espionage. That said, for the you know, if it's already in existing networks or existing partners of some of these telecom providers, do you expect some of these European countries to simply stay the course, to not take the action of banning Huawei as the U.S. has done?
I agree with Bob's point that it's not as easy to rip and replace, but you do want to sort of mitigate the risk a little bit. And as you think through 5G and you think through the next 5 to 7 year cycle, you perhaps think through a more distributed strategy, and this is the time to do it. So in 2019 and 2020, as you lay the groundwork for a wide distributed infrastructure, companies who are large telco providers and perhaps have footprints in more than one country are going to think through, okay, do I want to put all my chips, you know, on one company, or do I take a more distributed approach relative to how I did things for 4G? Also, the landscape, the architecture of 5G itself may permit that sort of an architecture. So they're going to be more steady, more measured, and I would imagine the way the U.S. is leaning on some of its allies, perhaps they take a more a security mitigated approach, regardless of whether they're, you know, the truth about Huawei comes to pass or not.
Okay, Bloomberg Intelligence's Anand Srinivasan in New York and Bob O'Donnell of Technalysis in Barcelona for us. Thank you both. Coming up, Trump, the president, signals a signing summit. Why? The president seems to be more optimistic about the fate of trade talks with China. That is next. This is Bloomberg. President Trump sounded optimistic Monday about a trade resolution with China. Take a listen to what he had to say earlier at the White House.
It looks like they'll be coming back quickly again, and we're going to have another summit. We're going to have a signing summit, which is even better. So hopefully we can get that completed, but we're getting very, very close.
Later in the day, he took to Twitter to reaffirm he will therefore be delaying the implementation of tariffs, saying China trade deal and more in advanced stages. Relationship between our two countries is very strong. I have therefore agreed to delay U.S. tariff hikes. Let's see what happens. Question mark. For more on the business implications of the trade discussions, I want to get to Washington, where our Bloomberg U.S. economics editor Randy Woods is standing by. So, Randy, he ends the tweet with, let's see what happens, question mark. What does the question mark mean?
Well, the question mark is whether they can finally hash out an agreement. By all accounts, the previous round of talks were positive. They made a lot of progress, but there's still apparently some daylight between the U.S. and the Chinese negotiators, and there are some very important provisions to work out. So they're closer to a deal, but they do not have an agreement just yet.
Now, I've got a chart here in the Bloomberg which shows a spike in Chinese stocks over the last few weeks. Is this because of optimism around these talks?
I think it probably is. A lot of the rhetoric coming out of the talks has been positive, both from Donald Trump and from the Chinese. And there has been some progress on specific provisions. Treasury Secretary Mnuchin mentioned that over the weekend they hashed out an agreement on currency manipulation to prevent that. And the Agriculture Secretary in the U.S. also mentioned that the Chinese agreed to buy more soybeans. So the fact that they're making progress is very positive for the Chinese economy. And the fact that they're not going to implement tariffs starting this week is great for Chinese traders. So you see a lot of that in the market.
How much, Randy, do you think this progress is due to both presidents' concerns about the economies in their own country? I mean, clearly, in general, we've been concerned about a broader economic slowdown in China. And, certainly there are pockets of folks in the United States who have, as you mentioned, the soybean farmers who are not faring well.
I think that's exactly right. There's a lot of concern on both sides that this trade war is taking a toll. As you mentioned, there's a slowdown in China's economic activity, and we're starting to see some soft spots in the United States in terms of consumer sentiment. Some factory indicators are also looking weak, and a lot of that reflects concerns about tariffs. So both sides have a strong incentive to strike a deal based on that outlook. And as we know, Donald Trump pays a lot of attention to the stock market, and the stock market's very sensitive to the outcome of these talks. And a lot of people speculate that's why, for example, today he repeated on more than one occasion that talks are going well. And a lot of people see that as his attempt to fuel the stock market so that he can boast about that to his base.
Now, with the president set to hold another summit with North Korea's Kim Jong-un, China's likely going to play a huge diplomatic role there. Does that leave some uncertainty still in this equation?
I think it definitely does. It's very complex, but apparently the Chinese and the North Koreans have a very close relationship, obviously. So if the talks there don't work out between President Trump and the North Koreans, he could potentially blame the Chinese and punish them on the trade front with these negotiations. On the other hand, the Chinese could punish Donald Trump if he doesn't meet them halfway in some of these trade concessions by not giving him a deal on North Korea. So it's a very complex political negotiations going on here. But it definitely is worth keeping an eye on this summit this week with North Korea to see how that could play into the trade negotiations.
All right, well, I know you're going to continue to cover for us. Let's see if that question mark can be resolved. Bloomberg's Randy Woods, thank you so much for stopping by. Coming up, America's tech superpowers continue to push for a global footprint, but could there be a home field advantage to focusing on the good old USA? We will discuss next. This is Bloomberg. The former CEO of Pepsi is now the newest member of Amazon's board. Indra Nooyi will also serve on the board's audit committee. This according to a regulatory filing. Nooyi becomes the 5th woman on the e-commerce giant's 11-person board. Last year, Amazon pledged to increase the diversity of its board following a shareholder complaint. Nooyi served as CEO of Pepsi from 2006 to 2018. For years, meantime, big U.S. tech companies, including Amazon, have pushed to gain a global footprint. One of the only companies successful in doing so is Apple. The iPhone maker is one of just a handful of companies to generate significantly more money overseas than in the U.S. However, Bloomberg Opinion's Shira Ovide says that while companies like Google and Amazon have struggled to grow internationally, relying on the U.S. is okay. For now, Shira joins us now to discuss. So bigger picture, Shira, who's doing well, who's not doing well abroad?
Yeah, so it's actually an interesting situation because companies, the internet companies like Facebook and Google parent company Alphabet, they do have a lot of users outside of the United States, but a significant share of their revenue continues to be generated inside the United States. And the issue here is that if you look at companies like Facebook and Google, they're generating most of their money from digital advertising. Microsoft is generating most of its money from selling technology to businesses, also a big market for Amazon. And in those two markets, digital advertising and business technology sales, the US is by far the largest market in the world. And in e-commerce, China is number 1, the U.S. is a distant number 2. And as we well know, China has not been a hospitable e-commerce market or internet market for U.S. technology companies.
Now, why is Amazon so reliant on sales in the U.S., and is that a danger? Is that an Achilles heel?
Yeah, I think it's really interesting. So, to my surprise, Amazon has actually gotten more reliant on the U.S. in the last 5 years rather than less. And part of that is because of AWS and its success with all kinds of customers. Again, a large portion of that spending is in the U.S. But also U.S. or North America e-commerce sales are growing faster than e-commerce sales outside the U.S. for the last couple of years. And so now 69% of Amazon's total sales last year comes from the United States. So
but what about all the money that Amazon has been pouring into India and other international markets?
I think that's a lot about the future, that those are growth markets, but right now are relatively small.
So Apple, meantime, has been doing well abroad, despite, much of the concerns we've been talking about sales in China. Will Apple's future international growth be as strong?
It's hard to see that. So the issue for Apple is that the biggest smartphone growth markets are places like India and Vietnam, where Apple doesn't look like they're in a great position, right? That their prices are relatively high compared to other smartphone companies, and they haven't really shown a willingness to tailor those products for a particular country's needs. And so that puts them at a little bit of a disadvantage, at least as far as we can see so far, in places like India.
Now, when it comes to Google and Facebook, do you foresee that their reliance on the United States will ever change?
It's going to be, I don't think so, not in the short term. So again, the issue is the biggest pool of advertising is in the United States. Yes, that market is growing more slowly than some of the explosive advertising growth markets, including China. But the U.S. is still by far the largest market, and so those companies are positioned well for the future if and when you start seeing large advertising markets in the developing world getting bigger as a share of total global advertising. But again, China is kind of the big hole for them. Where
right, they may never have access.
They may never be able to access China, and even if they are, they may never be successful there.
Now, I do want to get your thoughts on this new Amazon board member, Indra Nooyi, adding a fifth woman to Amazon's board. Of course, you remember the shareholder pushback about the lack of diversity on Amazon's board, and they've answered some of those protests. What do you make of the choice of Indra Nooyi?
Yeah, I mean, in addition to the board diversity issue, I think she's also a really great addition to that board, given her long experience at PepsiCo. She, as a former consumer product company CEO, knows what the challenges are of being a traditional company that's trying to pivot to the e-commerce world. And so she has that perspective now as an Amazon board member.
Now, speaking more broadly, Amazon included, what do you see as the international financial picture of these U.S. tech companies, let's say in the next 5 years? How much actually changes?
It's hard to see it changing materially in the next 5 years. Amazon might be the exception, right? We could start seeing some of those outside the U.S. e-commerce markets like India really take off. But again, if you're dependent on advertising, or if you're Microsoft depending on business technology sales, the U.S. is still just this huge sponge of revenue for those companies to take advantage of. And I don't see that changing, even if, again, the majority of users for companies like Facebook and Google are not in the United States. It's still where the money is.
Outside of Apple, what are the U.S. tech companies, the other U.S. tech companies that are doing well abroad or getting a greater portion of their sales abroad?
Well, I mean, look, this is all relative. So both Facebook and Google are generating a little bit more than half of their revenue outside the United States. So that's, impressive. The hardware companies, the business technology hardware companies, have tended to do well in places like Europe. So if you think about IBM or Cisco or Oracle, those companies do well abroad, as do the chip companies. Companies like Intel and Qualcomm, right? Everybody needs computer chips, no matter what country you're in. So those companies are well positioned. But if you look at, again, the giant internet companies and e-commerce companies, it's a little bit of a harder sell outside the United States, at least in terms of their finances.
Now, international growth considered, I mean, you and I have been talking over the last several weeks and months about techlash, the sort of backlash against U.S. consumer tech companies. I mean, all of these companies have lost, hundreds of billions of dollars in market cap value over the last several months. Do you expect them to recover that over this year, or are we at a new normal?
Well, I think you have seen some of the stock prices of the giant internet companies come back from that swoon that we saw starting in September, October last year. So there certainly has been a recovery. But I think that what we've seen in terms of this backlash to big technology companies, that is a permanent fixture of life for these companies now. It doesn't necessarily mean that their market value is going to crater or going to go to zero, but it does mean that this is now the #1 risk factor for every big technology company, is this kind of increasing risk of regulatory pushback or user anxiety or user defection as a result of their size, power, missteps, involvement in election manipulation and things like that.
Right, and certainly going into 2020 campaign season already, much to be determined. Bloomberg Opinion, Shira Ovide, thank you as always for joining us. Well, you may have heard a collective sigh of relief from American theater owners after the Oscars. Green Book was named Best Picture, beating out Roma, the movie produced by Netflix. It would have been the first Best Picture win for a streaming service. Netflix tried not to rock the boat too much. It released Roma in a few theaters several weeks before subscribers could watch online, but still many theater owners were not happy with that strategy. Home exercise startup Peloton has chosen Goldman Sachs and JP Morgan Chase to lead its IPO. Bloomberg has learned the offering could value the company at more than $8 billion. Peloton sells exercise bikes and treadmills with tablets attached that stream live fitness classes. Coming up, California takes the lead when it comes to protecting user data online. What the state has planned to let you take on big tech. That is next. And later in the show, Buffett's tech positions why the legendary investor still loves Apple but is scared off by Oracle. We will discuss. This is Bloomberg. While the tech world is waiting to see what Congress will propose when it comes to protecting user privacy, California isn't. The state is looking to strengthen the California Consumer Privacy Act and let consumers go directly after the likes of Google, Facebook, and more when they break that law. The measure would allow consumers to sue such companies when that happens. It is a move that could signal an onslaught of class action lawsuits, and one the tech industry opposes. To discuss, we've got Ariel Fox-Johnson, Senior Counsel for Policy and Privacy for Common Sense Media. She joins us from Cleveland. And here in the studio with me, we've got Bloomberg's Kartik Mehrotra, who covers litigation. So, Kartik, this law passed, but there are details still being worked out. What is happening now?
So, in 2018, the CCPA passed unanimously. They set aside 2019 to figure out some of the details of how it would be enforced. And one of the big proposals that we saw this week, Friday, was this right to private action. It would, if passed, permit consumers in California who feel that their data has been distributed without consent or in breach of their user agreements to sue for monetary damages against companies like Facebook and Google. There are a number of other proposals like the right for consumers to find out how much their data is worth, and B, to gain access to that data and to know exactly how it's being distributed down the line. So there's a lot of proposals up in the air.
Ariel, does common sense support some of these stronger potential additions to the law?
Yes, common sense is very supportive of efforts to strengthen the California Consumer Privacy Act. We expect also to see efforts by industry to weaken it. which we will oppose, but we're very supportive of strengthening efforts, particularly this private right of action that Carter Kay mentioned.
So, Carter Kay, what are the tech companies lobbying for? Because they opposed the law initially. They funded the law as opposition. Right. But ultimately, everyone was on board with what was written. You know, what are they lobbying for now?
Well, against a right to private action, for starters. In a committee hearing last week, a lobbyist for the industry said that this would be a bonanza against the industry. There will be so much litigation that it would be tough to come out from underneath from. So that's a big no-no for the industry. There's some details as well, like the right to have loyalty programs with consumers that they want to ensure, to protect. That there are some concerns that they would end up being sort of discriminatory, and then some details in the weeds about exactly who is being covered, which businesses of what size, those sorts of details.
Ariel, if the law passes as written, what would change for me as a user?
If the California Consumer Privacy Act, are you the private right of action? So if this new Senate Bill 561 by Senator Jackson passes, you as a California resident would be able to take a company to court if they sell your data when you've told them not to, or if they're not transparent about what they do with your data, or if they don't let you delete it or access your own data.
So, couldn't this law, Carter Kay, be overruled by federal privacy legislation if it comes?
That's a concern, right? If Congress ultimately down the line passes some sort of legislation that would preempt what's happening in California, there could be a scenario where everything that the lobbyists are fighting for in Sacramento could be null and void.
Ariel, you know, as I understand it, the tech companies are already lobbying in Washington on, you know, potential federal privacy legislation. What do you know about sort of the back and forth between these companies and lawmakers, and what ultimately could end up on the table?
So the companies want federal legislation, but they want federal legislation that will preempt all state legislation. And there are some folks in Congress who are supportive of that. There are other folks in Congress who would like federal legislation, but they want it to be a baseline to protect all Americans, but allow states to continue to innovate. So that's a real fault line. And if we see a private right of action expanded in California, I have no doubt that companies will be clamoring even more for a federal right, and one that prevents states from offering stronger provisions.
Now, California Governor Gavin Newsom is talking about a data dividend, advocating that companies actually pay consumers for use of their data. Is that something that makes sense to you?
I'm not sure that Governor Newsom has provided sufficient detail that he has full specifics on a plan right now. He's talked about ensuring that consumers know how much value that they're providing to companies with their information. And we think transparency and knowing what you're giving up, because you're not really getting these services for free, would be a good step for consumers to have some awareness of the value they're providing.
All right. Well, I know this is something that Carter Kay, you are going to continue to follow for us. Ariel Fox-Johnson of Common Sense Media and Bloomberg's Carter Kay Mehrotra will continue to chart progress on this law. Thank you. Coming up, Buffett's cloud confusion. Why the legendary investor says he doesn't understand the cloud computing business. That is next. Plus, Qualcomm out with a new chip. Why the company's president says 5G is going to become critical infrastructure. This is Bloomberg. Last year, Berkshire Hathaway entered a $2.1 billion stake in Oracle. Then, by the fourth quarter, it was out of the Oracle business altogether. Why? Well, it's because Warren Buffett says he doesn't understand the cloud computing business, and that his previous experience with IBM helped with that decision. That's what he told CNBC on Monday. To discuss further, we've got Bloomberg's Catherine Chinglinski in New York, who covers Berkshire Hathaway for us. So, Catherine, he doesn't understand cloud computing? Warren Buffett?
It's not a complete shocker. I mean, he's avoided technology investments a lot over his 54 years at Berkshire. But this was interesting. Normally, Berkshire, they'll get in a stock and they'll stick with it for 5-10 years. I mean, he was an investor in IBM for quite a long time. But with Oracle, they got in the third quarter, and by the fourth quarter, they were gone. And I think it was kind of an interesting take. He said, yes, he learned his lessons with IBM, and he thought he understood Oracle, but he actually realized he didn't quite understand the business there. And I think that's interesting. It's sort of like he's giving himself a little flexibility to maybe try out an investment and then cycle back if he doesn't really understand it.
Didn't have a huge impact on Oracle shares, at least his comments today. Oracle shares ended the day slightly up. What did he have to say about Apple?
Now, Apple was interesting because Berkshire cut their stake in that company at in the fourth quarter, but Buffett clarified that that was not him. That was actually an investing deputy who was needing to reallocate their portfolio a little bit. And I think that's a good sign. You know, Apple's been facing obviously some questions. It's been kind of a rough start to the year a little bit. And Buffett said he stands by the company. In fact, he would like to buy more, except it's a little expensive right now.
So his comments about Kraft Heinz were quite newsworthy. You know, what were the most important things that he had to say today?
Well, I think after the $15.4 billion write-down Kraft Heinz took last week that sent their shares to a record low, I think investors were sort of wondering, you know, is this the chance for Buffett to swoop in and buy the rest of the stake that he doesn't own? He made it clear he doesn't really want to do that. He doesn't really want to sell any of his shares, but he's not expecting to actually buy any more either. And I think that's a kind of a telling comment. You know, it's been hard for some of these consumer companies. And he mentioned even Kraft Heinz, their sort of deal-making strategy has been a little bit troublesome as prices for businesses have risen. So I think it's kind of a sign that maybe he doesn't really want to go gung-ho on Kraft Heinz.
All right, Bloomberg's Catherine Chiglinski, thank you so much for breaking down Buffett's remarks today. Thank you. Well, Qualcomm's newest chip will connect to 5G high-speed data services that will bring faster download speeds and speedier connections. I sat down with Qualcomm President Cristiano Amon for an exclusive interview ahead of MWC to talk about the company's latest moves into the technology.
One of the big announcements we made at the show, we're very proud of it, is the Qualcomm 5G Power Save technology. And that is actually a technology that is allowing the first generation 5G phones to allow you to have an all-day battery life. We have a very mature smartphone base today. Users won't settle for any less than what you have on your phones today, and I think that's the bar for those new 5G flagships, and we're happy of a number of OEMs announced phones at this show with this technology.
Now, isn't it really the carriers that decide how and when 5G happens, and are they really on board for a rapid launch?
Yeah, Emily, this is a great question. I'll do a comparison because I think sometimes we forget about what happened in 4G. When we were about this time launching 4G technology, that was about over a decade ago, we had 2 operators and 4 devices. Look at where we are right now. We have 20 operators, 30 devices. It's an order of magnitude different. Actually, it's a proxy about how much faster 5G is going to get deployed.
So talk to me about this partnership with Samsung that you've engaged in. They've now announced a flip phone. Will a new gadget like that help accelerate this? I feel that there's enormous potential for 5G to change the form factor of devices. We're very proud of this partnership with Samsung and how they have been a great partner, pioneering a new technology with us. We also see a number of different devices being announced, and we see a potential for form factors to change. The most important thing is, as you change your experience with 5G, you're going to want a different type of device and a different type of screen size and resolution, and the apps are going to become way more powerful, which will actually have a more powerful hardware that goes along with it. So you think it's not the form factor that's going to accelerate 5G, it's 5G that's going to change the form factor?
Yes.
And what kind of form factors do you see?
I think we will start to see, bigger screens are here to stay. I think you will see the opportunity for larger screens as you have flexible OLED technology. You're also going to see devices that are more specialized for more capable gaming, because 5G will allow you to have mainstream gaming on 5G devices. And also you're going to see devices that are going to converge between productivity. Now, over time, we expect to see virtual reality or augmented reality devices, as well as a companion to your phone that are going to be using 5G technology, and we hope them to look like eyeglasses.
Now, other companies coming out with 5G, Xiaomi, OnePlus, they've got their own 5G plans. How worried are you about the competition?
Not worried. All the 5G launches announced at the show, with probably exception of one device, all of them are using Qualcomm technology.
So what about Huawei? Is that the one?
Look, when we look, we always been competing with Huawei, but there's also a customer of Qualcomm. But the most important thing, when we think about China in general, I like to put it within that context. China mobile ecosystem see 5G as an opportunity for them to expand not only in China but globally. And we see Xiaomi, Oppo, OnePlus, Vivo, and a number of other companies actually embracing 5G and going to Europe markets, even in the case of OnePlus going to United States markets. So we think our China business will continue to expand, and 5G will be a great opportunity for that.
Huawei is facing bans on its networking equipment around the world, the UK in particular, an interesting one to watch. How closely are you following the Huawei situation?
It's not really the business that we're in. I think our infrastructure play, it's in the small cell, especially as we think about densifying 5G networks. So we're not directly related, but Huawei is a partner on the infrastructure as we do interoperability. I think it's a sign that, if anything, this whole discussion is a sign that 5G is now way beyond mobile. It's going to become a critical infrastructure because it's going to power everything around us.
My interview there with Qualcomm President Cristiano Amon. Coming up, the U.S. is getting ready to start sending its astronauts into space without Russian help. So just how does SpaceX fit into their plans? We'll discuss next. This is Bloomberg. Now to a Bloomberg scoop. Caesars Entertainment and DraftKings are teaming up in a deal that'll give the internet betting company an easier path towards online and mobile gambling rights nationwide. For more, we're joined now by DraftKings CEO Jason Robins on the phone. Jason, thanks so much for calling in. So DraftKings already has its own sports book. Why partner with Caesars?
Caesars is a terrific brand, an incredible partner, and they really bring a lot of the things to the table that we need and that we feel is complementary with what we're doing.
They're being pressed to put themselves up for sale by major investors, including Carl Icahn. Does that concern you?
You know, I think whenever you have a public company that's trading at, I think, really great prices, and a lot of investors are going to see the value. And so we're not surprised, and we think it's a real sign that people see the strength in the brand and the assets that Caesars has.
So how fast do you think other states will legalize gambling and online gambling, and how big do you predict this market can be?
Well, I think you're already seeing a tremendous amount of momentum in various states. I think, you know, dozens of states have introduced legislation in the last few months, and it's hard to say. It's anyone's guess how many will pass, but I wouldn't be surprised to see a half dozen or more states pass legislation over the next several months. And you know, as far as how big can it be, I think after you get a decent chunk of the population, you're talking tens of billions of dollars of revenue that will be generated by this market.
Now, you've certainly got a head start, but what do you think is the biggest obstacle remaining for DraftKings to be the top gambling app?
Well, I think this is still very early. You know, to use a sports analogy, we're in the first inning or maybe even spring training. So I think there's still a lot of things that need to happen, and we're acutely aware of where we feel we're strong. We're really strong when it comes to building mobile user experiences, having strong customer experiences on digital platforms, and acquiring and retaining customers on those platforms. And we're going to partner up with companies that bring the complementary things to the table that we feel we need to be successful. But it's going to be a long road, and it's all about execution, and we're really focused on that.
All right, DraftKings CEO Jason Robins, fresh off a new partnership with Caesars. Thanks so much for calling in. Well, NASA has given SpaceX the go-ahead to begin testing a newly designed launch capsule. Elon Musk's space exploration company will test its first commercially built spacecraft designed for humans to the International Space Station March 2nd. This launch will be unmanned as NASA is looking to revive the U.S.'s ability to fly to the space station without buying seats on Russian capsules. Here to discuss, we've got Francois Chopard, CEO and founder of the Starburst accelerator and incubator for space companies. They've also recently announced a new accelerator in LA. And you're launching these accelerators in partnership with NASA, in partnership with the Air Force, Lockheed Martin. What opportunities remain for space innovation?
Again, I think we are still at the beginning of a new space era. And even if we have already SpaceX active in the space, Blue Origin, and a few others, I think space is becoming much bigger than what we think today. Today, it's just the space stations, a few satellites that we launch every year. But there's much more opportunity that we can discuss.
Like what?
We can talk about manufacturing in space, for example, and we have a couple of startups working on that.
What would you want to manufacture in space?
So there's a startup that is starting to make noise, which is called Made in Space. And after developing 3D plastic parts, they are really thinking of manufacturing fiber optics, for example. When you manufacture this type of product under zero gravity, the specificities and the performance of these fiber optics are 10 times or 1,000 times much better.
Interesting. So what do you make of, I know you closely follow all of the space companies, and certainly SpaceX in particular has made huge strides towards sending a human into space. Are they going to be ready?
So
when they're ready, when they say they're ready.
So right now, they've been ready for a couple of weeks or even a couple of months. They're just waiting for the final NASA clearance, and I understand that was taking a bit more time than what they thought. They finally got it, and it's planned to launch, as you said, next week. And I think it's great. I'm not worried about SpaceX being able to be ready. I know they have a tremendous drive and capability to achieve crazy things. So I would not be too worried about this.
Why aren't you worried?
Because they demonstrate in the past the ability to launch Falcon 1, Falcon 9. I was with them at their launch with Falcon Heavy a year ago. And I still remember a year ago, nobody would believe they would be able to achieve such performance.
Right, a lot has happened in a year.
Yes.
Like this year alone.
Yeah, and so now they're just reaching the next step, which is bringing to the U.S. that capability of sending men to space that they lost with their previous vehicle, and so they're gonna not rely on Russia anymore.
So how huge would this be? This would be the first time since 2011 that the U.S. or a U.S. company would be sending a human being to space without having to buy a seat on a Russian space shuttle.
I think it's pretty big because there's a couple of things. We know that SpaceX can launch so many more times in a year than any other companies. I think they're going to launch people to the space station for a much cheaper price than previously. The previous program was a huge cost and a huge price for NASA. And then as they're going to start sending people to the space station, then that's also for them preparing the next step, which is sending people to the moon or to Mars.
How does the progress that SpaceX has made compare to what you're seeing at Blue Origin?
So yes, it's the Blue Origin. They started earlier than SpaceX, and they are not yet to the point of SpaceX. So the drive that Elon has brought to SpaceX has made a huge difference. Yeah, that's a company that is going much faster. They probably have the same type of engineer, but drive differently, and that's make the difference. Also, SpaceX has always had financial constraints, which is not the case with Blue Origin. So it's bringing more pressure on the company.
And what about Virgin Galactic?
Virgin Galactic, they have a different approach. They have Virgin Galactic and Virgin Orbits to launch small satellites in low Earth orbits, and they are on their way. Virgin Galactic, it's more about space tourism. So first at the frontier of the atmosphere of space, or around 100 kilometers, and which is a different program than sending people to the space station. It's a different business model.
So clearly, they're all doing slightly different things, and this could be a huge market if the market is indeed created. Who's going to be a winner here? Are they all winners in your view, or what will separate sort of the winners from the not?
I like to compare where we are in space right now at the beginning of flight in the 1900s or the beginning of the automotive approximately at the same time. I'm not surprised to see hundreds of companies trying to reach that market. It's like it's a new kind of a gold era per se. And so there's going to be a lot of winners. And maybe the first to start or to go might not be the most successful one. And so that's why we think that there's still a lot of opportunity. There's still a lot of smart startups who want to enter into space, and that's what we want to bet on.
All right, Francois Chopard, Starburst Aerospace CEO with a new accelerator that has just launched. Thank you so much for stopping by. Good to have you back here on the show. And that does it for this edition of Bloomberg Technology. We are live streaming on Twitter. You can check us out there at Technology and follow our global breaking news network TikTok on Twitter. This is Bloomberg.